Are we seeing a buying climax or a runaway gap on the charts of S&P 500? Junk that finally hits records. Gold pulls back as dollar rallies, and we will also look at Palladium and natural gas at the today's analysis. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, March 22nd, 2024. As always, please remember to hit the like button, subscribe to this channel, share this video, and make any comment that you like, hopefully nice ones. Or if you have any questions, also you can ask a question. If you're a subscriber, stay tuned. We will cover various securities in my members only video today. Cannabis actually looks interesting. I'm gonna cover that. Apple is in a caution phase all of a sudden. We'll also cover a whole bunch of various securities that I consider more speculative in nature, such as Archer Aviation, Open Door Technologies, Select Quote, as well as some of the gold-related ones. So stay tuned for that. If you're not yet a subscriber, consider signing up by going to MasterChartsTrading.com. As always, throughout the presentation, I will be using my proprietary MasterCharts Trading market indicators, trading indicators. You can see them on this chart. There's green, blue, red, and yellow lines. You can have them on your chart as well. Unfortunately, there is some extra noise in the background. I do apologize, but there is not much I could do at this point. So looking at the chart of S&P 500, this is SPX, the actual index. As always, my technique is to wait. Two ways to do this. Either buy on breakout when the stock for the first time breaks above the blue line. So this indicators basically provide support resistance levels. So for example, back here in 2022, October 2022, we hit the low for S&P 500, and then finally in April 2023, about almost a year ago now, we broke out above the blue line, continued higher, and then we had a pullback towards this blue support resistance line in October 2023, just a few months ago. And then we just started to rally, but we did buy. So in fact, I actually bought myself S&P 500. Notice this up arrow. I bought it myself back in October of 2023. So using my indicators, it's pretty easy to follow. They're basically trend following indicators. So now we have this gigantic rally that went from about 4250 to about 5200. So almost, let me see, 100 points or so, right? I'm sorry, 1,000 points. That's a very big rally, about 22% or so since the last alert. Okay, so what are we seeing now? So I have this sign here. Is this a runaway gap or an exhaustion climax, or buy-in climax? So a runaway gap or a breakaway gap happens when a security gaps up and then continues higher. So in that sense, this gap where I'm hovering between November 13th and November 14th was a runaway gap or breakaway gap, whatever you want to call it. And then you can see that we just get a big rally. Now we are at the top of the range. I mean, we had a very big rally. Like I said, we had a 22% rally for S&P 500, and now we had this gap up. I mean, we had another gap up here as well, but this gap just looks kind of suspicious to me. So we had a very big green candlestick, a gap up, and now we're pulling back again. So to me, it's beginning to look like an exhaustion, a buy-in climax. So we want to consider this when we're making decisions. If this is indeed end of this run, then we can expect a pullback. So where do we expect a pullback to go to? Very, shallow pullback, will probably be even quicker, would be to this green line, which is about 4 or 5% away from today's prices. At that point, most likely, if we do get that pullback, the stock will, S&P 500 will try to bottom and then try to rally again towards new highs. If it doesn't make new highs and kind of just tops out, then we can expect a more deeper pullback to unfold, possibly towards this blue support resistance line, and that would be around 8 to 9 to 10% or so, 9 to 10% or so. So at that point, if that occurs, we will have a situation similar to what we had back in October of last year, 2023. We will need to make a decision. Do we want to be buying, or do we want to be doing nothing? Quite often, this type of pullback, after especially such an enormous run, will be bought. In other words, we'll come down, try to bottom, and then rally. So there is going to be a high likelihood of, it's kind of like a high probability trade, because after such a big pullback, there is a pent-up demand for people buying on pullback, basically. Such a big rally, there's a pent-up demand for people buying, at a relative discount. If this is the top, indeed the top, and we just had a climax, then a pullback into mid-April to maybe even early April, because this is not a lot. This is like 4 or 5%. It can just collapse in like 2-3 days. So we can see, if this is indeed the top, then we can see a pullback into early April. If we will continue lower, then I think something like that, like into mid-May, we might be able to reach this blue support resistance line, which is at 47.70. We can also turn on the 200-day exponential moving average. Currently, 200-day moving average is around 11% away. So again, we can expect a pullback into that area. Again, I'm using my indicators. I think they provide a better way to look at the markets, because moving averages are kind of nice, but they're not as accurate as my indicators. So I tend not to use the moving averages pretty much ever. But for now, we are at new records, so I'm still open. My position is still open. S&P 500. I bought it back in October. I did sell a half because back here in January, I thought that this was the top, and notice how wrong I was. We still continued really quite a bit higher. Just from experience, this does look it's quite overextended, but this rally from October really surprised many analysts, and obviously I was one of those analysts that was surprised as well. So who knows? I mean, maybe we'll just keep going higher. It's unlikely, but it's not impossible. We had precedents like this in the past. So for now, I'm gonna keep my position open. I will most likely take profits if we do pull back towards this green line, which is currently around 3 to 4% away. So I have half my position open, so most likely I'll just close the position entirely, or maybe even take more profits. So we'll see. At this point, let's just kind of there's a potential that this indeed is an exhaustion gap, or rather buy-in climax, that we're this gap up between 20th and 21st of March, so between Wednesday and Thursday. We'll see very shortly if this is indeed the effect. High yield bonds, junk debt. So as always, important to know why do we give a hoot about high yield bonds. And here is the reason. High yield bonds, JNK, notice this yellow indicator down below here. It's a correlation coefficient to S&P 500. Correlations are huge between S&P 500 and high yield bonds. So a high for high yield bonds is a vote of confidence for this rally. And indeed, we just exceeded. This is a previous high from December 2021. It took this long. We finally have exceeded it with an all-time high a couple of days ago. This is was exceeded yesterday, actually, on 21st of March. I'm sorry, yeah, on 21st of March. So, great news. I think it's a good thing that high yield bonds and stocks are moving together in lockstep. We will continue to hold. In fact, alert was indeed sent for high yield bonds. Alert was sent in October of last year. And if you are up, or if you are still open, I would continue holding open. So it's 11% move for high yield bonds. It is a 22% move for stocks, so 24% almost. So alert was sent exactly the same day, 23rd of October, right there where I'm hovering, versus JNK. Alert was sent same day, basically, 23rd of October, but the move was only 11%. So high yield bonds and in general are, you can think of them as funky, high yielding stocks almost. They have lower volatility, but that could be a good thing if you're trying to build a portfolio which is just doesn't experience as much fluctuations as, for example, stock portfolio. So high yield bonds are, it's a good idea to have this security, especially in retirement accounts, because you can put money in there and just kind of keep them there for a while. And especially if you're doing things like trading on weekly charts, where long-term kind of ideas in mind, then definitely high yield bonds is a good idea to have around, because they don't have as much volatility as stocks. But if you're trying to build a low volatility portfolio, this could be a valuable part of your portfolio. So by and large, stocks and junk debt right now are moving together in lockstep, making new all-time highs. No divergence. Good news. I think we should continue to hold stocks and bond and junk debt. However, it is indeed possible that we have seen the top, at least for a little while, and pullback will unfold in the next few weeks to months. So we need to watch for that and potentially take appropriate actions, depending on your time horizon, obviously. Right, let's move to a different universe. We're currently looking at dollar, USD, dollar currency index, DXY is the ticker symbol. This one has given us quite a bit of trouble. So first, let's go back. Dollar was in a downtrend. You can see downward facing arrow here. This is an actual alert back in March of 2023. We got a bottom here in July of 23 and went in a big rally, broke out above the blue line, meaning that we were now in an uptrend in the October of last year here, but then unraveled and actually went back down into a downtrend. And you could have made a little bit of money here on the downside, but just notice how nicely my indicators provided for a very easy visualization of price action. It came down exactly to the yellow line right there in December of last year, 27th, 28th of December, and then rallied. Okay, so we broke out above this red support resistance line, and now back in February of this year, we actually broke out into a new uptrend. Came down again towards the red line, again bottomed right there. I'm not making this up, okay? These are actual, these indicators are calculated, all right? We can look at, so this is what I'm talking about as far as exponential moving average. There's a 200-day exponential moving average. It wouldn't provide you with this bottom or this bottom here, okay? So that's the reason why I'm not really using the exponential moving averages, or moving averages for that matter. So what are we seeing right this instant? We're seeing an attempt to break out into a new uptrend. Notice what happened today. Again, I'm not making this up. Dollar currency index found resistance at the blue support resistance line. We actually went above it intraday, but closed right below it. So close was at 104.430. Blue line is at 104.434. Do you see how close we are? If we look on the weekly chart for DXY, yeah, we're doing. Is blue line providing resistance? It's possible, but just the way it closed, it looks like next week we might be able to break above it. So normally dollar and gold move in the opposite direction. Since we do trade gold at MasterCharts Trading, we need to know what the dollar is doing. And right now it's giving us very confusing signals. So normally, again, the dollar and gold move opposite to one another. However, lately it hasn't been as clear. So let's look at gold. And gold has been in a clear uptrend since it broke out into a new uptrend where I'm hovering exactly a year ago, a little bit over a year ago, in January 23. Notice as upward facing arrows. Some of them are actual alerts. These light blue lines are light blue actual alerts. These purple ones are not alerts, but if you have my indicators, you can just use them to trade as well. So right now we're having this weird situation where gold is moving higher, but so does the dollar. Okay, dollar is also moving higher. So notice this equation. So XAU divided by USD. So gold divided by US dollar. If the bottom part of the equation of XAU divided by USD is getting bigger, and it might actually be breaking out into a new uptrend. It might continue strongly higher. Yet gold is not really reacting as much as would be expected. We have two potentially tapping candles here. Number one is on the 21st of March. We have a shooting star candlestick, and then today, on the 22nd of March, we have a follow through to the downside. So we actually have a confirmed shooting star candlestick on the daily chart. On the weekly chart, it's not as clear, although it does look like a shooting star. However, you have to know that this is an all-time high for gold. So it's a very strange situation right now. If dollar continues to strengthen, dollar continues to move higher, gold could come under pressure. However, if it drops to this blue line, which is at around 2068, it will become a good buying opportunity. Question is, should we be buying gold at that point? And at this point, again, I'm not 100% sure, just because dollar is breaking out. So it's really a pretty tough situation. Okay. What do you guys think? Do you think gold will continue higher after this potential pullback? or will the dollar become king again? Dollar cash king. So that scenario, both of them are quite scary if you think about when cash becomes king. That's could be like a disaster somewhere in the world or in the United States as well. So we have plenty of disasters going on right now. Ukraine, Israel, shipping around Red Sea being attacked. It could get really scary actually. So my take right now is that I want to wait and do nothing with gold and dollar. Let me know what you guys think by making a comment below. I had one of the YouTube subscribers made a comment that they wanted me to look at Palladium and natural gas. So Palladium futures, PA1 exclamation point. Looking at daily chart, but let's look at weekly first. So weekly just means each candlestick is a week's worth of activity. Palladium just hit a probably multi-year low. Yes, 2018 lows were very close by. Did we hit 2018 lows? Let's look at it. This is 2018 lows. We're very close to them. We didn't quite make it there. I mean, this chart doesn't look particularly bad. If you want to buy Palladium at this point, your risk is tiny. Your risk is most likely new lows. So 2018 lows. So let's say you know nothing about nothing, and you just decide to buy it. I like to think that I know nothing about nothing. I like to ignore things. That's if you just buy Palladium right now, you have a 17% risk. Okay, I would put my stop basically below this lows, below the February lows. So maybe even a little bit less, maybe like 15% risk. But this chart doesn't look too bad. So the reason why I think that is the following. So notice how wide apart the indicators were back in 2022. They were like 1200 points or so. Notice how close the indicators are now. They're about 530 points. Okay, so what does that mean? That means that if we break out above this blue support resistance line, Palladium will become bullish, will become in an uptrend. And it's not that far away. You see, back here, to break out above the blue line, it would have needed to it would have needed to move 870 points, but right now it only needs to move about 350 points. Okay, so 36% to become officially in an uptrend. All right. So I like the fact that the indicators are kind of getting closer together. Okay, we can actually kind of look into the future and see if they're getting even closer together. This is just an offset, and we can see that they are actually getting even closer together, and the blue line is dropping even further into June, April, May, June. So it looks like there is a good chance that Palladium has indeed bottomed, and by that extension your risk is that 15%, 17%, but your reward is quite large, because if it continues higher and goes towards even let's say 2022 highs, that's a nice move. It's over 100% move. So you decide, do you want to buy Palladium? Again, I'm asking for opinions. What do you guys think about it from fundamental perspective? I'm only looking at this from a technical perspective, but is there also demand for Palladium just from a fundamental perspective? So make a comment, tell me what you think. Natural gas. So probably the most volatile security known to man or humankind is natural gas. I don't recommend trading it until you really know what you're doing, and you have to have nerves of steel really to trade this thing. I have personally traded natural gas. This year I bought natural gas as UNG. So UNG, let me see. It doesn't. Don't use UNG to analyze. So notice UNG. It's just, or it's next to lows. But NG1 exclamation point or natural gas continuous futures. It looks quite different. Okay, so I actually went ahead and I bought natural gas on UNG rather on 9th of January of this year, and I got stopped out on 19th of January of this year with a relatively small loss. Okay, so let's see. My loss was 20%. You see, this move was huge, but in the sense of my position was very small relative to my account. So I got only a small amount of UNG because I know that this thing is insanely volatile and it can easily go against you. Not only that, I had to have the strength to say that I was wrong right there on January 19th and I exited. Okay, if you didn't, what was your loss? Okay, you're an additional 40% down. So let's just say that you actually went ahead and bought where I bought. You're 50% down versus my 20% down. Okay, so that's a big difference. All right, so if you trade in natural gas, hopefully you're not, but if you are trading natural gas, please honor your stop. Okay, and admit to yourself that you need to move on from a trade that's not working. Okay, what's happening now? Let's look at natural gas right this instant. It's next to lows. We can look at weekly, so we're below the 2023 lows. We're very close to 2020 lows, and those 2020 lows are actually, you know, if they're taken out 2020 lows, then we'll go to like multi-year lows, you know, to 1996 lows. If we take out these lows here from 2020, then we will be at like multi-decade lows. Okay. Why is it happening? Actually, is a very good question. If you follow natural gas markets as far as fundamental perspective, why do you think that is happening? I don't follow fundamental markets fundamentals at all. So why do you think it's next to multi-decade lows? Is it because there is just so much natural gas, now demand for natural gas? What is it? But right now, I probably would do nothing to natural gas. I would be afraid to buy it here because it could collapse easily to like, multi-decade lows. So the best thing I could offer is just wait for it to get above the blue line. So perhaps wait until we get to about $2.84 from the current of 1.6. That's an 80% rally. All right. Other than that, I'm not really excited about natural gas. All right, that's it for this week's recap. Head over to MasterChartsTrading.com, click on sign up one of the products. Again, I have a new yearly plans. If you buy it yearly plans, you're going to be paying only $49.95 per month, or equivalent. So if you buy a yearly subscription at $599 or almost $600 per year, that's a 17% off from the monthly subscription. Monthly, you pay $59.95 per month for both indicators and newsletters. You can also get just the newsletters or just the indicators. So the indicators are these lines on the chart. You can have them on your chart for TradingView.com. And my newsletters come out every day to my subscribers, and weekly I send out a weekly alert, or the weekly newsletter in the video format, so it's coming up very shortly. If you're a subscriber, stay tuned. Other than that, thank you for watching again. Please don't forget to make a comment, share this video, and have another great trading week. Thank you very much for watching. Bye bye.